When you're running an e-commerce business on Shopify and considering funding options, a common and important question that comes up is whether Shopify Capital reports to credit bureaus. This is crucial because it can impact your business's financial standing and future borrowing capabilities. Let's break it down in a way that's easy to understand. The basics of Shopify Capital. Shopify Capital is a financing program offered by Shopify itself, designed to help eligible merchants get quick access to funds. Unlike traditional bank loans that often require extensive paperwork and credit checks, Shopify Capital bases its offers primarily on your store sales performance and history on the platform. This makes an attractive option for many growing businesses. The reporting process, what you need to know. Here's the direct answer. Shopify Capital generally does not report to personal or business credit bureaus under its standard operations. This means a few key things for you as a beginner. No direct impact on your personal credit score. When you take funding from Shopify Capital, it typically won't appear on your personal credit report, and your personal credit score won't be directly affected, either positively or negatively, by your repayment behavior. This can be a relief for entrepreneurs who want to keep their business finances separate from their personal credit. No credit building. Because Shopify Capital doesn't report to credit bureaus, using it won't help you build a traditional business credit history. If your goal is to establish or improve your business credit score for future, larger loans from traditional lenders, Shopify Capital won't contribute to that directly. Sales performance is key for eligibility. Instead of your credit score, Shopify Capital focuses on your store sale performance history and engagement with the platform to determine if you're eligible for funding and how much you can receive. This means consistent sales in a well-run Shopify store are your best assets when considering this option. Repayment is automatic. Repayments for Shopify Capital advances are typically a fixed percentage of your daily sales. This means that if you have a slow sales day, you pay back less. And if you have a great sales day, you pay back more. This automated system is designed to align with your business's cash flow. Important consideration: what happens in default? While Shopify Capital doesn't report positive repayment behavior, it's crucial to understand what could happen if you default on your payments. If you fail to repay the funds as agreed, Shopify has ways to address the situation, which could escalate to collections. If a debt goes to third-party collections, it could then appear on your credit report and negatively impact your credit score, both personal and business, depending on how your business is structured and the nature of the agreement. Even though Shopify Capital doesn't typically report to credit bureaus, it's always a smart move to maintain excellent financial hygiene for your business. Keep accurate records of your sales, manage your cash flow effectively, and strive to repay any funding obligations promptly. This not only keeps you in good standing with Shopify, but also builds a strong financial foundation for your business, regardless of credit reporting.